Hey YouTube, what's happening? Chris here. I want to bring you all an update on Bitcoin. Guys, I think this is very important to really pay attention to Bitcoin. There's some interesting things going on right now, and I wanted to bring them to you. So what we're actually going to be doing today, we're going to be examining a few things, guys. We're going to be looking at a rising wedge. We're going to be looking at some Fibonacci levels. And for the rising wedge, what we're going to do, a lot of guys, they'll talk about a rising wedge, say this or that. What we're going to do is directly go into the Encyclopedia of chart patterns, and I'm going to give you all the information I can on a rising wedge. And basically, guys, the performance to the upside and the downside out of this rising wedge, because we're definitely forming one right now. There's a lot of characteristics that are happening on Bitcoin here. And remember, guys, with rising wedges, we definitely could break to the upside, but we also could break to the downside. So most times, guys, more likely than not, rising wedges will break to the downside, but they can also be bullish short-term continuation patterns is what my book says. So we're going to dig into all this, guys. I'm excited to be here with you today. If you like what we do here, like, subscribe, hit that notification bell. I'd love to have you here with us. I appreciate you guys. So what my book says, Encyclopedia of Chart Patterns, this by Thomas Bulkowski, guys. It says the appearance of a rising wedge, an upward price spiral bounded by two intersecting upsloping trend lines. So that is what we're having right here. What we're having are those minor highs and minor lows, guys, where we're just basically chopping back and forth in here. We're having higher lows and we're actually having higher highs so far as we're squeezing and getting pinched towards this apex right here. Now what it says, upward breakouts, reversal, or continuation, short-term bullish continuation. So in a bull market, this is how a rising wedge performs, guys. Its performance rank is 18 out of 23, so it's not the most reliable there. Just want to let you know, break-even failure rate is 8%. The average rise out of a rising wedge, so if we are to break up, it's around 28%. Change after trend ends, minus 30%. Volume trend is typically downward, and that's what we're experiencing right now, guys. Volume is going down. Throwbacks happen 79% of the time. So say we are to break out of this, guys, 79% of the times you'll actually come back and back test this top trend line. A lot of times that'll happen. And then it says, surprising find that busted patterns perform well. Wide patterns perform better than narrow ones. Wedges with a rising volume trend or heavy breakout volume also do very well. And what I wanted to point out to you that I saw on this in this Encyclopedia of Chart Patterns, guys, it says, for the identification characteristics, two upsloping trend lines. Draw two trend lines, one along the minor highs and one along the minor lows. The trend line must both slope upward and eventually intersect. Multiple touches. Well-formed rising wedges will have multiple touches of the two trend lines. Be skeptical of wedges that have fewer than 5 touches, 3 on one side and 2 on the other. And that's what, let's dig into that real quick, guys. Let's take a look at these touches here. Remember, this is on the one-day chart that we're looking at right now. Okay, guys, so we'll start down here. 1 touch. We'll count that 2, 3, 4, 5, and we're going to see here, guys, and then maybe even this one right here. So we're definitely in that area there. 3-week minimum. A rising wedge has a minimum duration of 3 weeks. Anything less is a pennant. Formations rarely exceed 3 to 4 months long. So, guys, let's take a look at how many days we've had here. 1, 2, 3, 4, 5, 7, 8, 9, 10. 17, 18, 19. So we're roughly at about 19 days, guys. So we're getting close to that 3-week time frame. So a break really could be happening at any point. And then the volume usually trends downward throughout the formation, and that's exactly what's happening here. And then it says for the apex of the price usually breaks out about half to 2/3 of the way of a rising wedge. Rising wedges rarely last more than 3 months. Just 21 patterns or 3% are longer than 3 months. So, guys, we're really going to be looking for a break out of this. And like I said, I can't tell you if we're going to break to the upside and go up there and challenge 9,500 to 10,000, or if we're going to break to the downside. If we do break to the downside, though, my target out of this, guys, I'm going to first be looking at this 0.236. It's 7,692 to see if we get a bounce off that. And then, guys, my hot spot. So if we are to come out of here and have a significant break to the downside, I'm looking at this 0.382, which is going to be around 6,818. There's a lot of areas over here, choppiness, support, and that's what I want to see, if we're going to find some type of support. And that's also lining up with that 50-day moving average where we could come and back test that. But that's if we do break down, guys. And also we'd have to break down and close down through this 20 EMA, which has acted as significant and very strong support throughout this entire uptrend. And that's sitting at around $8,087. So that is a spot we'd want to look at as support. So I work my way down. I'm going to look at the 20 EMA for support if we break to the downside, then the 0.236, then ultimately that 0.382. And we're going to see what happens with that, guys. But you want to look for areas of confluence. So if we're to break to the downside, this area right here would be a really hot spot. And it says, guys, if we were to break down out of this now to the downside, your typical fall is going to be around like 17 to 35%. So right out of here, what we're going to do is take a price range tool and we're going to see. So guys, say we even broke today. Right down into this range is about that 20. So this is really a hot spot, guys, if we were to break to the downside, where I'd be looking at us to get a significant bounce. Now to the upside, if we were to run like that, guys, and this said that we could have an average rise of about 28%. Now what I want to do is take our price range tool out of this, and we're just going to go from where we're at, guys. That's the only thing I can do for you right now. And we're going to go up about 28% and see where that lands us. And guys, that's going to put us around 11,033. And let's see what that would look like in terms of overhead resistance here. So guys, we'd have to get over around this 10,000, which is going to be significant. And then this 28% would throw us right around in here, guys, where we would be testing this reaction, where we came up, or we had this massive fall, we came back up, we fell again, then we came up before we had another massive fall. So that's where I would target, guys, to the upside. So my upside target would be around that 10,000 to 11,033, and to the downside we'd be looking at that 68.18. Guys, that's what I'm always going to do with you. We're going to formulate a plan for the upside. We're going to formulate a plan to the downside, because I cannot tell you exactly what's going to happen. Rising wedges, anything can happen, and that's the same with any of these chart patterns. Yes, they can break bullish, and some are more prone to break bullish, some are more prone to break bearish. Typically, guys, this is more of a bearish chart pattern, just so you know. We really squeeze up in the here, and a lot of times you'll fall over, but it doesn't necessarily have to happen. And a lot of the times, you know, you can still break to that upside. So we do want to keep an eye on that. Next thing, what I want to do is go into some indicators with you, and I think the indicators are important. And what I want to go to first, guys, is this NVT. And this is the network volume transaction, guys. And typically, the more research I've done on this, anything over 150, you're in overbought territory. And guys, right now we're at 180 and 187, so we're definitely in overbought territory. And you can see we just crossed down through that signal line. We're kind of heading down there. So that's something that I want to put on your mind, that we're overbought on the NVT. So that is a little more bearish. And we're just going to work through these indicators, and we're going to write down which ones are bullish, which ones are bearish. Next one I want to go to is our MACD on the one-day chart here, guys. Remember, this is all on the one day, because we want to get some good information here. And guys, on the MACD, we actually just did have a bearish crossed histogram starting to tick to the negative. So that's something we're going to want to keep our eye on. So there's two bearish things right there. Next one is our RSI, our relative strength index. And guys, with our relative strength index, we're also having a little bit of bearish divergence here that I want to point out to you. So if we take that there, we'll just do a rough trend line, guys. This is the trend line we'll want to see a break from right here. But what's happened is you can see the price here, guys, is around that 8,100 or so, and our RSI was up around 91. Price pushed up higher, but our relative strength has been going down. So we're almost in like what seems to be almost a symmetrical triangle here with our RSI. So if we draw that, guys, we're just going to kind of see if we're either going to break down out of that or we're going to break up. Okay, so that's something we're going to keep our eye on. We're at 62 right now. So, guys, that one there, we're not in overbought territory. 70 or over is going to be that overbought territory. We're at 62, so there's definitely more room to run to the upside, but there's definitely room to go to the downside where we could drop into the 40s, 30s, anything like that, guys. And that would probably happen if we are to break bearish out of this rising wedge. And then the next one I wanted to bring for you was the Bollinger Bands. And this is also going to tell us if we're starting to get a little crazy here, guys. A little outside the bands, a little overextended. I haven't taken a look at this in probably 2 or 3 days here. So, guys, let's zoom in on this. Okay, so guys, what happened was it looks like we almost wicked down to this middle band. This middle band's at around, we'll call it 8,200 right there. And then the top band is going to be sitting around roughly, guys, around that $9,000 area. So we're sitting between the middle band and that upper band. So that's why I said in terms of the Bollinger Bands, we still could have another leg up, guys. That could be a possibility. But also that leg down would also put us around that 72.87 if we were at the bottom of the Bollinger Bands there. And I like to use the Bollinger Bands just to show us if we're really starting to get overextended, guys, because it's important to know either side if you're getting overextended, if you're getting overbought, if you're getting, you know, oversold, those type of things. Those are the conditions that you want to play. All right, but in terms of this rising wedge, guys, we really have to keep our eye on it. And what I'm going to do, I'm going to set an alert here around 82.36, because what I want to know as well is that if we have a close below this trend line, guys, I'm huge on trend lines. A lot of people who followed my work, like on Litecoin and other things, they know I really play trend line breaks and closes with trend lines. I think it's very important, guys, to do so. Let me see here if I can get this up for us. I apologize, guys. You know what? My alarm right now is giving me some trouble because of where I have my screenshot. But basically, guys, where I'd put my alarm would be around that 8,200 or so. I'd want to know to the downside, and then to the upside, I'd want to know around that 9,300 if we're getting a break out of that. So these are the things that I'm looking at, guys. It's looked like we've tried to push up a few times here. Like I said, pay attention to the divergences. You can see we had a little doji candle up here. We came back down. We tried to push up again, but we did not get over this high there. So now we potentially could be getting in a little equilibrium pattern where we're still having higher lows, but we're having lower highs. So let's just take a look today, guys, where this candle closes. If it closed where it's at today, that has the potential of being a bearish engulfing candle out of this move here. That would be the lower high, guys. And then that would be a bearish engulfing candle, and we'll see if we end up moving to the downside or to the upside. But I wanted to bring this to you. I wanted to bring you some facts about these rising wedges, guys. I know some people, they'll pull up chart patterns and whatnot, and they won't really give you a lot of information on it. And also what I did as well, guys, in my playlist, I have a whole tutorial of the rising wedge that is out of this Encyclopedia of Chart Patterns. So pay attention to this, guys. We're at a really critical area for Bitcoin right now. God bless each and every one of you. If you like these videos, like, subscribe, hit that notification bell. You guys are great. Appreciate you.